Hey guys, so today is Tuesday. Basically a new trading day. And I want to make a quick recap, but also want to talk about basically today's and also yesterday's trading conditions, because I realized that definitely Mondays and also Tuesdays are more difficult trading days for me. So definitely they are definitely more likely to be high resistance and also like seek and destroy conditions where we don't really can have like clean low resistance liquidity runs, but we are often stuck in high resistance, often take multiple trades, and also like lose the most. So therefore I will try to keep really an eye on trading conditions on Monday and Tuesdays. And maybe I will try to avoid them completely at all, so that I really focus on trading on Wednesday, Thursday, and Friday, because to me that's like the most clean days where we can basically expand also like the most on the daily chart. I think it's a bit different for weeks where we have, for example, high impact news in like the second half of the week. For example, if we have I don't know, FOMC or NFP late in the week, or CPI, something like that, then I will try to focus to trade on Monday until Wednesday. But if not, then I will definitely try to avoid Monday and Tuesday. I don't know if that means that I will not trade them at all, but yeah, I will definitely be more careful. Still, today was actually a small winning day, but before we go into the trade executions, I want to just talk about the daily conditions. So we are still within a downtrend, definitely trading lower, but still in high resistance, because we have higher time frame gaps. Also today we are closing higher than we closed the day. We are closing, no, not closing. We are opening higher than we closed the day before. And we also have like huge wicks to the downside and also to the upside. So still within high resistance, also like trading within all the higher time frame gaps, which makes trading more difficult. But let's drop to a 1 hour chart. So what we can see right here is basically I will focus on the first trading sessions, so that we traded lower within Asia, and from there on we basically reversed within London, also New York Open Kill Zone, and took out the Asia buy side liquidity. And yeah, as you can see right here on the 50-minute chart, from there on we are stuck within really difficult high resistance seek and destroy conditions. So we only took out highs, then traded lower, took out lows, traded higher, took out highs. So really difficult. We could not expand from here higher or lower. We are really stuck within the price range right here. So yeah, really difficult trading conditions. And that is basically relatively typical for Mondays or Tuesdays. I don't really know why, because I wasn't really aware of the fact that I have like the trouble, or that I have troubles the most. Can you say that? I don't know. That I lose basically the most on Tuesday, Monday, but that's basically it. Before we drop lower, I want to show you, as always, regular trading hours. So what's really interesting is the fact that we could not take out the high right here, and also we had a new opening range gap higher. So we are in trending conditions on regular trading hours, but on trending conditions to the downside on the higher time frame. So therefore, right here you can see basically that we have that we are not trading aligned with both with regular trading hours and with the higher time frame, because the higher time frame is trying to trade lower, but regular trading hours has a new opening range gap higher. And that's not only the point, because for example on Monday we did trade it through all the high time frame gaps, and that's also okay, because then we traded up to the upper quadrant, and from there on we traded lower, only with high resistance, yes, but still. But right here we really respected the upper quadrant, and then we want to see actually a trend continuation, but we still entered only high resistance in here. We could not expand above our previous AM session high, so therefore we are not in trading conditions, and that's due to the higher time frame, which basically keeps the price range locked in here, because we cannot trade lower due to the new opening range gap, and we cannot trade higher because of the higher time frame trend. So we only traded to the quadrants also of yesterday's new opening range gap. That's also really interesting to see that we almost reached the upper quadrant right here, and and that's also the reason why the 9:30 opening price is really important to us, because it shows us the in that case the high of our new opening range gap, because right here with 9:30 we open the new opening range gap. Therefore the 9:30 opening price is really important to us, how we react basically on the level right here. And as you can see, the close with the 15-minute bodies right here is perfectly so respecting the 9:30 opening price, and also trading perfectly down to the upper quadrant of the new opening range gap. But now I want to show you NQ, so let's get into it. I think I will also show you my executions. So as you can see right here, I was trading within the London close macro, lunch, and also the lunch macro. But first to the AM session. So with the 9:30 opening price, we traded higher, and I did not want it basically to chase that, because we not only have trending conditions to the downside on the higher time frame trend, but we also have not reached with the low right here our upper quadrant. So as I go back to the regular trading hours chart right here, you can see that we did not reach the upper quadrant. Therefore we are not trading aligned with regular trading hours, and also not trading aligned with the higher time frame. So I don't want to chase anything long in here. We took out the buy sell liquidity of New York open kill zone, and also created an SMT. And in that case, actually the short right here could have been possible. Why? Because after we took out the low right here, that's engineered sell liquidity, and therefore we have to expand higher. But we failed to do that, and therefore after we close below the low right here, which took out the engineered sell liquidity, we have a break of structure, because we do not only wick below it, but also close below the wick. And here we only barely traded below it. So that's really important to see. And therefore we have a break of structure. We have a SIBI, basically a bearish fair value gap. We traded into it, and then from there we sold off. But what I actually did not like about the setup right here is the fact that we had such a huge displacement. So I don't know, to me that looked like a bit manipulative, and also the fact that we had to trade through the high time frame gaps right here, and also back through all the opening prices. It could have been definitely a really clean delivery to the downside, definitely, because we are now trading align with the higher time frame, and also align with regular trading hours, because we still have to trade below the low right here to reach the upper quadrant, and we are also trading with the higher time frame, which is bearish. So that's basically what we want to keep in mind. But I was really patient, and I did not or was not really sure if I would trade today. But then with the London close macro, I was looking for higher prices. That's due to the fact that we respected the upper quadrant of the new opening range gap so well. So in that case, we failed to reach the consequent encroachment level. We traded higher, retraced, traded perfectly to the upper quadrant, traded higher, retraced, traded perfectly to the opening of our new opening range gap, which is the 9:30 opening, and still traded higher. So that's basically really clean delivery actually on regular trading hours, which basically tells me that we want to trade higher. And that's also really clean if you have, or if we want to see a lunch or long close macro reversal. But still, because especially hourly chart, or the higher, definitely the higher time frame, but also because of the hourly chart right here, you can see that we are not in bullish conditions, and therefore we were definitely not able to expand higher. So really important to also like keep an eye on the hourly chart, because to trade against the hourly chart is really difficult, and you should not expect that we will reach external buy-side liquidity, so only a retracement. So for example, to the upper quadrant of the price range. So basically my first loss right here, I only mitigated in here, so that was one trade. Then with reaching 11:30, lunch begins, and for lunch we want to see that we basically in that case that we retrace and basically do damage to the AM session liquidity. And why we do not expect that we trade lower is due to the fact that we are respecting regular trading hours, as I showed you before. So still right here, we are really trading perfectly well to the 9:30 opening price, so really respecting the 9:30 opening. And also on the 5-minute chart, you can see it much cleaner. So right here, the bodies perfectly aligned to the 9:30 opening price, showing to us that we are respecting the high of the new opening range gap. And because we traded basically back to the upper quadrant right here, we are now expecting a trend continuation with regular trading hours, which is higher in that case, because we have a new opening range gap which is higher. Therefore, we expect a trend continuation higher with regular trading hours. But and we also had a short-term run and stops right here, so engineered liquidity, and from there on we expanded higher, displaced and closed above the inversion gap right here, where I took my first entry, added right here, and got stopped right here. So really aggressive candle to the downside. I thought I was done for the day, but with the lunch macro, we just delivered once more clean higher. And also the ES was basically now showing displacement, so I was more convinced that we were definitely able to target the upper quadrant of the price range, also AM session liquidity, and in fact we did that. So I took my first partial right here, I sold 2 contracts right here, and I got stopped with my last partial right here. I was aiming definitely for higher prices, maybe consequent encroachment of the higher time frame gap, or even external liquidity, but because the higher time frame, the hourly chart, the daily chart is really bearish trending, we are definitely not able to do that. And that's basically the whole day, as you can see it right here, is typical Monday or Tuesday delivery. So definitely there are setups which are capable of being a low resistance liquidity run. For example, the short right here, which is a perfect ICT 2022 market maker sell model. But yeah, it's always really difficult. For example, right here we only traded below the sell liquidity. We did not reach to expand lower. What we should expect actually in really bearish trending conditions. We have also clean liquidity down here near the midnight opening price, also the high time frame gaps, but we in fact reversed afterwards, and we're also all the time not able to expand lower. So really seek and destroy conditions. Also like only trading within our opening range, so we could not really expand higher or lower. So yeah, therefore that's basically the reason why I want to be more careful on Mondays and Tuesdays, because it's typically a more high resistance delivery, because we are trading only most of the time intraday and we are not really able to expand. So and also what I want to mention is that the setup with the lunch reversal basically, or the London close macro reversal, is really a plus setup, especially if we are trading a line with regular trading hours. If we have bullish trending conditions on the higher time frame, for example, if we have like a daily or hourly bullish conditions, then the reversal right here could have definitely reached external liquidity, because we are able to expand on the daily chart, for example, as well. And that would have been, for example, on a Thursday, Friday, a really good opportunity. But because we are bearish trending to the downside, we are not able to reach the external buy side liquidity, and we are not able to expand higher, and in that case not even able to expand lower because of regular trading hours. So yeah, I made about 40 bucks for the day, not really much, but yeah, so right here, that's for today. Yeah, that's basically it. Still trying to mitigate previous day loss, so try to mitigate the weekly loss, basically that the loss of the week will be as minimal as it can get, but yeah, we will see. So that's basically it, and see you soon.